There is a currency more valuable than the dollar, more precious than gold, and more finite than any resource on this planet. It is the only asset you are born with and the only one you are guaranteed to lose. Every second that passes is a withdrawal from your account, an account that can never be replenished. Warren Buffett, a man who has mastered the art of compounding money, understands a deeper truth. The most powerful form of compounding is not financial, but temporal. It is the compounding of wisdom, of focus, of insight, all of which are cultivated in the soil of a single, non-renewable resource: time. We live in a world that glorifies the packed calendar. Busyness has become a status symbol, a perverse badge of honor. We see executives with back-to-back meetings from dawn till dusk and assume they are important, effective, powerful. We fill our own schedules with obligations, calls, and tasks, mistaking activity for achievement. We are a culture of frantic motion, constantly reacting, forever catching up, tethered to the relentless beep and buzz of a world that demands our attention but rarely deserves it. This is the cult of busyness, and it is the most insidious thief of potential in the modern age. Warren Buffett's life is a radical rebellion against this cult. His calendar, the supposed cockpit of a man controlling a financial empire with assets in the hundreds of billions, is famously, almost shockingly, empty. Days can go by without a single scheduled meeting. This emptiness is not a sign of idleness. It is the ultimate strategic weapon. It is the deliberate creation of a vacuum into which can flow the two things that have built his entire fortune: deep thought and extraordinary opportunity. He understands that true power isn't the ability to command 1,000 people in 1,000 meetings. It's the freedom to sit alone in a quiet room with a book, to let ideas percolate, to connect disparate dots, and to be completely, utterly available when the single phone call that matters more than 1,000 meetings finally comes. This is the final promise, that by understanding and applying Buffett's philosophy of time, you can reclaim this ultimate asset. This is not about simple time management tips or productivity hacks. This is a fundamental rethinking of your relationship with your own life. It is an antidote to the noise, a blueprint for building a life of effectiveness over busyness, of purpose over motion. We will deconstruct the 5 pillars of this philosophy, revealing how to build an architecture of focus that allows for the deep work, continuous learning, and decisive action that define true success. This is the journey from a cluttered calendar to a clear mind, from being a slave to the schedule to becoming the master of your own time. This is how you control your time completely. The first and most foundational pillar of Warren Buffett's time philosophy is the principle of deliberate emptiness. This isn't about being lazy or unproductive. It's a strategic choice to architect a life with vast, unstructured swaths of time. It's the understanding that the highest value work, thinking, learning, and making a few great decisions, cannot happen in the 30-minute slivers of time between scheduled calls. It requires a quiet mind and a clear schedule. This principle is the bedrock upon which his entire empire of effective leadership is built, a stark refutation of the modern executive's obsession with a packed agenda. It posits that a full calendar is a sign of a cluttered mind and a life lived at the mercy of others, priorities, while an empty calendar is the ultimate symbol of control and the prerequisite for extraordinary achievement. To truly grasp this, we must journey back to a moment that perfectly encapsulates this philosophy in action. The story is not one of a frantic, high-stakes negotiation, but of a quiet, deliberate non-action. For years, Bill Gates, a man whose own schedule was once legendary for its minute-by-minute segmentation, would pester his friend Warren Buffett to see his calendar. Gates, a titan of the tech world, operated in an ecosystem where speed and a packed schedule were proxies for progress. He couldn't quite fathom how a man running an entity as vast as Berkshire Hathaway could have so much free time. Finally, on one occasion, Buffett relented and showed Gates his appointment book. Gates looked down at the paper, and what he saw was astonishing. The pages were largely blank. Weeks would go by with only a handful of entries. There were no back-to-back meetings, no color-coded blocks of obligations. There was just space. White, empty, glorious space. Gates reportedly looked at this sparse calendar and was floored. It was a revelation. He realized that Buffett wasn't just managing his time, he was curating it. He wasn't simply reacting to inbound requests. He was proactively preserving his most valuable resource for its highest and best use. That use wasn't dashing between meetings, it was reading and thinking. Buffett famously told Gates, "You've got to keep control of your time, and you can't unless you say no. You can't let people set your agenda in life." This moment was a paradigm shift for Gates, who later credited Buffett with teaching him the importance of creating time for deep thought. The image is powerful. One of the world's most successful men, whose primary job is capital allocation, revealing that his secret weapon is the allocation of his time. He doesn't fill his days to feel productive. He empties them to be productive. He guards his hours and days with the same ferocity that he guards Berkshire's capital, understanding that a misspent hour is a permanent loss, an opportunity for reflection and learning that is gone forever. This wasn't about a single week or a fluke. This was his system. A system built on the radical idea that the most important work a leader does is the work that happens when nothing is scheduled. The underlying psychological principle that Buffett masterfully circumvents with his empty calendar is known as the action bias, a cognitive trap that ensnares nearly every ambitious person on the planet. Action bias is our innate, often irrational preference for action over inaction, even when inaction is the more prudent course. In a state of ambiguity or pressure, we feel a compelling urge to do something, anything, to feel a sense of control and progress. This bias is deeply rooted in our evolutionary history. For our ancestors, inaction in the face of a potential threat could be fatal. The rustle in the bushes was better met with flight or fight than with quiet contemplation. In the modern corporate world, this translates into what many call the cult of busyness. A packed calendar, a flurry of emails, and constant motion become proxies for productivity and importance. We believe that if we are not actively doing something, attending a meeting, making a call, writing a report, we are not working. This creates a vicious cycle. We fill our time with low-value tasks to feel busy, which leaves no time for the high-value tasks of thinking and strategizing, which in turn leads to poorer decisions and more fires to fight, requiring even more frantic action. Buffett's empty calendar is a direct and powerful antidote to this bias. He has consciously engineered his environment to favor inaction over mindless action. He understands that in the world of long-term investing and strategic decision-making, the penalty for a bad decision, a rushed acquisition, a poorly thought-out strategy, is infinitely greater than the reward for a dozen small busywork tasks. His default state is not action, it is contemplation. By keeping his calendar clear, he removes the external pressure to be constantly on. He creates a space where inaction is not only acceptable, but is the required state for his primary job, thinking. He is a cerebral athlete, and he knows that his performance depends on long periods of quiet training, not on playing an endless series of meaningless exhibition games. This approach also short-circuits another related bias, the mere urgency effect. This is our tendency to prioritize tasks that are urgent but not important over tasks that are important but not urgent. Responding to an email feels urgent. Reading an annual report and thinking about a company's competitive advantage for the next decade is important, but it rarely feels urgent. A packed calendar is the natural habitat of the mere urgency effect. The constant stream of meetings and alerts creates a perpetual sense of urgency, forcing our attention onto the immediate and trivial. Buffett's empty schedule starves this effect of oxygen. With no urgent meetings to attend, the truly important, reading, learning, thinking, can rise to the surface and command his full attention. He has inverted the typical executive's reality. For most, deep work is a luxury they try to squeeze into the cracks of their schedule. For Buffett, deep work times the schedule, and meetings are the rare interruptions that must be rigorously justified. So how do we translate this principle into a practical blueprint for our own lives? How do we, who are not the Oracle of Omaha, apply this model? The first step is to perform what we can call a calendar audit. For one full week, you must track every single minute of your professional time. At the end of that week, categorize every activity into one of three buckets: essential, outsourceable, or eliminatable. Be ruthless. An essential task is something that only you can do and that directly contributes to your most important long-term goals. An outsourceable task is something that needs to be done but not necessarily by you. An eliminatable task is a meeting, report, or activity that, if it vanished, would have zero negative impact on your core objectives. This audit will be a brutal and enlightening confrontation with reality. You will likely find that a vast portion of your time is spent in the third bucket. The second step is the great cancellation. Based on your audit, you must now begin the process of emptying your calendar. Start with the eliminatable bucket. Decline recurring meetings that have lost their purpose. Politely push back on requests that do not align with your essential goals. A powerful tool here is the delayed yes. Instead of an immediate yes to a request, respond with, "That sounds interesting. Let me check my priorities and get back to you next week." This pause creates a crucial buffer, allowing you to assess the request rationally rather than reacting emotionally. It also signals to others that your time is a scarce and valuable resource. The third step is to build your moat of unavailability. This involves architecting your default state to be unavailable rather than available. Block out large, non-negotiable chunks of time in your calendar for deep work or thinking time. These are not placeholders to be moved when a meeting request comes in. They are your most important appointments of the day. Treat a 2-hour block of reading and thinking with the same sanctity as a meeting with your most important client. Use tools to enforce this. Set your email to only download new messages at specific times of the day. Put your phone in another room during your deep work blocks. The goal is to make interruption the exception, not the rule. Finally, the fourth step is to schedule the void. This may sound paradoxical, but it's crucial. Actively schedule nothing. Look at your week and intentionally create entire afternoons, or even full days, with zero appointments. This is not vacation time. This is strategic emptiness. This is the time for serendipitous learning, for chasing a thread of curiosity down a rabbit hole, for reflecting on a past decision, or for simply being prepared to take that one unexpected, game-changing phone call. This four-step process, audit, cancel, build the moat, and schedule the void, is the practical application of Buffett's principle. It's a systematic way to move from a reactive, cluttered existence to a proactive, focused one, reclaiming your time as the powerful asset it truly is. Now let's explore the antithesis, the path of the 99%. This is the world of the hustle culture CEO, the manager who measures their worth by the density of their Google Calendar. Their day begins before sunrise, not with quiet reflection, but with a frantic triage of overnight emails, each one a small spark of someone else's agenda. Their calendar is a brutalist mosaic of 30-minute meetings, stacked back-to-back with no buffer for thought or transition. They sprint from a budget review to a marketing sync-up to a one-on-one, their mind constantly context-switching, never fully present in any single conversation. They believe this is what effective leadership looks like. They are a human router, directing traffic, forwarding information, and feeling a constant, low-grade hum of anxiety that they might be missing something. Lunch is a sandwich eaten hunched over a keyboard, one eye on a spreadsheet and the other on Slack. Their work is not the creation of value, but the management of communication. They're addicted to the dopamine hit of clearing their inbox, of seeing an empty notification tray, mistaking inbox 0 for mission accomplished. They say yes to almost everything, every meeting invitation, every request for a quick chat, every opportunity to be in the loop. They do this out of a deep-seated fear of missing out, a fear of being seen as uncooperative or unimportant. Their own priorities, the deep, strategic work that could fundamentally move their business forward, are perpetually pushed to later, to the weekend, to the next vacation that never comes. The disastrous consequence of this lifestyle is not just burnout, though that is almost inevitable. The true catastrophe is the slow, silent death of strategic thought. This executive is so busy fighting fires in the engine room that they have no time to look at the map and see that the ship is sailing in circles. They make countless small decisions every day, but they lack the space and clarity to make the few great decisions that truly matter. Their decision-making becomes reactive and tactical, not proactive and visionary. They become excellent at managing the status quo but incapable of creating the future. The company they lead may appear to be a hive of activity, but it suffers from a terminal case of strategic drift, slowly losing its competitive edge because its leader has no time to think about it. This is the path of the 99%, a life of motion without progress, of effort without impact, a treadmill of tasks that leads only to exhaustion. The direct financial connection between Buffett's principle of deliberate emptiness and massive wealth creation is both profound and quantifiable. It manifests as a form of cognitive arbitrage. In a market full of players who are forced to make rapid, reactive decisions based on limited information and fragmented attention, the person who has the time and mental space to think deeply and act decisively holds an almost unfair advantage. Consider a typical investment firm or corporate M&A department. Their days are filled with meetings, calls, and a constant pressure to do deals. Their analysis is often rushed, their due diligence constrained by deadlines imposed by others. They are playing a high-speed game. Buffett, by contrast, has opted out of that game entirely. His empty calendar allows him to spend hundreds of hours, if needed, reading the annual reports of a single company, understanding its business model, its management, its competitive landscape, and its culture. When he finally makes a decision, it is not based on a 30-minute pitch or a time-pressured deadline. It is the culmination of a long, deep, and uninterrupted thought process. This translates into two distinct financial advantages. First, the avoidance of catastrophic error. Many of the biggest financial losses in history, from disastrous acquisitions to misguided strategic pivots, are the result of decisions made in a state of haste, ego, and incomplete thought. The empty calendar is a powerful defense against this. It acts as a cooling-off period, a mandatory pause that allows reason to overcome impulse. The cost of a bad multi-billion-dollar acquisition avoided is a direct, tangible return on the investment of thinking time. Second, it enables the seizure of fat pitch opportunities. Buffett often uses the baseball analogy of waiting for the perfect pitch to swing at. In the financial world, these perfect pitches are rare. They are often born out of market panic, widespread fear, or structural shifts that others are too busy to see. During the 2008 financial crisis, while most of the world was in a state of frantic panic, Buffett's phone began to ring. He had the capital, but more importantly, he had the time and the clear-headedness to analyze complex deals like the Goldman Sachs and General Electric investments under immense pressure. He wasn't bogged down in operational meetings or internal fire drills. His calendar was clear. He was ready. The billions of dollars he made on those deals were a direct financial return on the decades he had spent cultivating an empty schedule. On a company's balance sheet, this principle doesn't show up as a line item called thinking time, but its effects are written all over the income statement and the statement of cash flows in the form of higher returns on invested capital, lower rates of costly errors, and the explosive gains from a few, well-timed and deeply considered strategic moves. The ultimate financial truth is this: a single hour of focused, clear-headed thought that leads to one great decision can be worth more than a decade of frenetic, unfocused activity. The second pillar of Buffett's philosophy is the profound understanding of time as a compounding asset. We are all familiar with the magic of compounding interest on money. A small sum, invested early and left untouched, can grow into a fortune over a lifetime. Buffett applies this same powerful logic to knowledge and wisdom. He sees every hour spent reading and learning not as a discrete event, but as an investment in a mental bank account that compounds relentlessly over time. The knowledge gained today doesn't just add to yesterday's knowledge, it multiplies it. It forms new connections, generates new insights, and builds a latticework of mental models that makes future decision-making faster, better, and more intuitive. This pillar repositions continuous learning from a passive hobby into the single most important active investment one can make for long-term success. It is the engine that powers the deep work enabled by the empty calendar. The foundational anecdote for this pillar lies not in a boardroom, but in the quiet, dusty stacks of the Omaha Public Library. Long before he was the oracle, a young Warren Buffett was a voracious, almost obsessive consumer of information. After graduating from Columbia Business School, where he studied under the legendary Benjamin Graham, he returned to Omaha. While his peers were climbing the corporate ladder, networking, and filling their days with the busy work of a budding career, Buffett embarked on a self-directed postgraduate education of monumental scale. He would go to the library and systematically devour every book on investing, finance, and business he could find. He didn't just read them, he internalized them. He read Moody's manuals, massive tomes filled with financial data on thousands of companies, page by page, line by line. He went through them twice. He wasn't looking for a hot stock tip. He was building a vast internal database of business models, competitive advantages, and historical market patterns. His business partner, Charlie Munger, describes this period with awe. Buffett wasn't just learning about specific companies, he was learning about the nature of business itself. Each annual report he read, each industry he studied, became a new piece of a mental puzzle. A lesson from the failure of a textile mill in the 1920s could connect with an insight about the capital allocation of a railroad in the 1950s. This wasn't just data acquisition, it was the slow, deliberate construction of what Munger calls a latticework of mental models. Buffett himself estimates that in his early career he was reading 600, 750, even 1,000 pages a day. Think about that. While others were spending their 8-hour workday in meetings and on phone calls, Buffett was investing those same 8 hours in his own mind. He was making daily deposits into his knowledge account. At first, the returns weren't obvious, but over years, and then decades, the compounding effect became unstoppable. The knowledge he gained about the insurance industry in the 1950s allowed him to understand and acquire Geico in the 1970s. The insights he gleaned from the rise and fall of department stores informed his investment in Coca-Cola in the 1980s. His decisions seemed brilliant, almost prescient to outsiders. But they weren't acts of spontaneous genius. They were the dividends paid out from a knowledge account that had been compounding for half a century. This period of intense, dedicated learning, hidden away in a quiet library, was the initial, massive investment that would fund his entire future. It was the living embodiment of his belief: the more you learn, the more you earn. The psychological principle that Buffett leverages by treating knowledge as a compounding asset is a powerful countermeasure to a pervasive cognitive bias known as hyperbolic discounting. This is the tendency for people to increasingly choose a smaller, sooner reward over a larger, later reward as the delay occurs sooner rather than later. In simpler terms, our brain is wired to strongly prefer immediate gratification. Given the choice between getting $10 today or $12 in a week, many people will take the $10. This is why it's so hard to save for retirement, stick to a diet, or learn a complex new skill. The rewards are far off in the future, while the pleasure of spending, eating the cake, or watching TV is immediate. The modern world is a minefield of hyperbolic discounting. Every social media notification, every breaking news alert, every email in your inbox offers a small, immediate hit of novelty or a sense of accomplishment. This is the $10 reward today. The alternative, sitting down to read a dense book on accounting or industry history, offers a much larger but deferred reward. The payoff, a deeper understanding that might inform a great decision 5 years from now, is abstract and distant. Buffett's entire approach to learning is a rebellion against this bias. He has trained himself to consistently choose the larger, later reward. He derives genuine pleasure from the act of learning itself, but he is fundamentally driven by the understanding of its long-term compounding power. He is playing the long game on an intellectual level. He is not reading for a quick tip he can use tomorrow. He is reading to build a mental framework that will serve him for the rest of his life. By dedicating the majority of his day to reading and thinking, he is making a conscious choice to forego the small, immediate dopamine hits of a busy, reactive life. He is choosing the slow, patient work of building intellectual capital. This discipline is not easy. It requires overriding a deep-seated psychological urge for immediacy. But the outcome is a cognitive superpower. While the rest of the world is chasing short-term information and reacting to the noise of the day, Buffett is quietly building a repository of timeless wisdom. He is not just informed, he is wise. And in the world of long-term investing and business, wisdom, not information, is the currency that ultimately matters. He has effectively rewired his brain to value the compounding of knowledge more than the immediate gratification of being busy, a psychological feat that is arguably as responsible for his success as his financial acumen. To apply this compounding principle, we must build a personal knowledge compounding machine. This is a systematic mental model for turning information into wisdom. The first step is curate your information diet. Just as you wouldn't build a healthy body on a diet of junk food, you can't build a powerful mind on a diet of social media feeds and sensational headlines. You must be ruthless about what you consume. Identify the highest quality sources in your field, the seminal books, the most respected trade journals, the annual letters from the sharpest thinkers. Dedicate 80% of your reading time to these timeless sources and only 20% to topical, current events. The goal is to prioritize evergreen knowledge over expiring information. A great business biography from 50 years ago will likely teach you more about leadership than 100 articles about today's market fluctuations. The second step is schedule your learning. As we learned from the first pillar, what doesn't get scheduled doesn't get done. You must block out non-negotiable time in your calendar for reading and learning. Start with just 30 minutes a day, but treat it with absolute sanctity. This is not free time. It is a critical investment appointment with your future self. As Buffett says, go to bed a little smarter each day. This consistency is the key to compounding. Reading for 30 minutes every day is infinitely more powerful than binge reading for 4 hours once a month. The third step is active reading and the Feynman technique. Passive reading, where your eyes glide over the words, is not enough. You must engage with the material actively. Keep a notebook. Write down key ideas. Argue with the author in the margins. More importantly, practice the Feynman technique, named after the physicist Richard Feynman. After reading a chapter or a concept, close the book and try to explain it in your own simple terms, as if you were teaching it to a child. If you can't, you haven't truly understood it. This process forces you to internalize the knowledge, not just recognize it. The final and most crucial step is connect and synthesize. This is where the real compounding happens. Don't just let knowledge sit in isolated silos. Actively look for connections between different things you are learning. How does a principle from biology relate to a business strategy? How does a historical event shed light on a current market trend? At the end of each week, spend 15 minutes reviewing your notes and explicitly asking, how do these ideas connect? What's the bigger picture here? This is the process of building your latticework of mental models. It's turning isolated facts into a web of interconnected wisdom. By following this 4-step model, curate, schedule, actively read, and synthesize, you transform learning from a passive activity into a deliberate, strategic process of compounding your greatest asset, your mind. The antithesis to this pillar is the information snacker, a character tragically common in our hyper-connected world. The information snacker wakes up and immediately consumes a breakfast of bite-sized anxieties from their phone, a dose of political outrage on Twitter, a curated illusion of success on Instagram, a handful of urgent but not important emails. Their day is a continuous stream of information snacking. They skim headlines, read the first paragraph of a dozen articles, and watch 2-minute summary videos. They feel informed because they are constantly exposed to new information, but they are starving for knowledge. They mistake the breadth of their consumption for depth of understanding. They can quote the latest tech buzzword or the daily stock market move, but they can't explain the underlying principles of the technology or the long-term economics of the business. Their learning is an inch deep and a mile wide. They are addicted to novelty, constantly seeking the next new thing, the next hot take, the next life hack. They collect information like a hoarder collects newspapers, piling it up without ever integrating it. The catastrophic result is a mind that is cluttered but not wise. They suffer from what Nassim Taleb calls the black swan problem. They are experts on the predictable everyday noise, but they are completely unprepared for the significant game-changing events that lie outside their shallow frame of reference. Their decision-making is brittle. Because they lack a deep, stable latticework of mental models, they are easily swayed by the prevailing narrative, the latest trend, or the most charismatic guru. They chase fads, whether in business strategy or personal finance, because they lack the foundational knowledge to critically evaluate them. Their career stalls, not for a lack of effort, but for a lack of wisdom. They work incredibly hard just to keep up with the torrent of information, but they never achieve the escape velocity of true expertise. They are forever learning but never understanding. This is the tragic path of the 99%, a lifetime spent swimming in a sea of information, yet dying of thirst for real knowledge. The direct financial connection of compounding knowledge is the creation of a massive, unassailable intellectual moat. Warren Buffett famously looks for businesses with durable competitive advantages, or moats, that protect them from competitors. The practice of continuous, deep learning builds a personal moat around an individual's career and investment portfolio. In the short term, the financial benefits might seem negligible. The person spending an hour a day reading about accounting principles probably won't get an immediate raise over the person who spent that hour answering more emails. But over 5, 10, or 20 years, the gap becomes a chasm. The individual with the compounded knowledge base starts to see opportunities and risks that are invisible to their peers. They can accurately price an asset because they understand its industry dynamics on a historical level. They can steer their company through a recession because they have studied how other companies survived similar downturns. This translates into tangible financial outcomes. In an investment portfolio, it means avoiding the hot stock or the speculative bubble that ensnares the information snacker, and instead making patient, informed investments in high-quality businesses that generate wealth over decades. The financial return is the alpha, the excess return above the market average, that comes from superior judgment. In a career, the financial return is a dramatic acceleration in earning power. The person with the intellectual moat becomes the go-to expert, the trusted advisor, the strategic thinker who can solve the company's most complex problems. They are no longer a cog in the machine. They are the one designing the machine. Their compensation begins to reflect their unique, irreplaceable value. A software engineer who only learns the latest programming framework is always replaceable. A software engineer who has compounded their knowledge of computer science fundamentals, system architecture, and business strategy becomes an indispensable leader. The financial manifestation is the leap from a salaried employee to an executive with significant equity or the successful launch of their own venture. Ultimately, the balance sheet of your life will reflect this. While others have assets that depreciate, their knowledge of a specific software becomes obsolete. Their tactical skills become automated. Your core asset, your deep integrated knowledge base, only appreciates. It is the one asset that can never be taken from you, and whose returns compound tax-free for a lifetime. The third pillar in Buffett's architecture of time mastery is the relentless, unapologetic power of number. If the empty calendar is the goal and compounding knowledge is the engine, then the word no is the shield that protects it all. Buffett understands a simple, brutal arithmetic. Every time you say yes to something, you are implicitly saying no to everything else you could have been doing with that time. For him, everything else is his highest priority activity, reading and thinking. Therefore, he has made saying no his default response. It's not born from curmudgeonliness or a lack of generosity. It's the ultimate expression of strategic focus. He has defined his priorities with such crystalline clarity that anything falling outside of them is an immediate and automatic no. This pillar is about moving from a reactive yes driven by obligation and fear of missing out to a proactive no driven by an unwavering commitment to one's own agenda. A story that perfectly illuminates this principle involves a task Buffett gave to his personal pilot of 10 years, Mike Flint. Buffett, concerned that Flint was not reaching his full potential by simply serving Buffett's own goals, walked him through a simple but profound exercise. First, he asked Flint to write down his top 25 career and life goals. Flint took some time and diligently listed everything he wanted to achieve. Next, Buffett told him to circle the 5 most important goals on that list, the absolute, non-negotiable priorities. This was harder, but Flint eventually narrowed it down to his top 5. At this point, Flint had 2 lists, the 5 circled items, his A list, and the 20 uncircled items, his B list. Buffett then asked him, "What about these other 20 things on your list? What is your plan for them?" Flint replied with the typical well-intentioned response of an ambitious person. "Well, the top 5 are my main focus, but the other 20 are still important. I'll work on those intermittently as I see fit. They are not as urgent, but I still plan to give them dedicated effort." Buffett's response was immediate and cut to the core of his philosophy. He told Flint, "No, you've got it wrong, Mike. Everything you didn't circle just became your avoid at all cost list. No matter what, these things get none of your attention or effort until you've succeeded with your top 5. This is a profoundly counterintuitive piece of advice. Most people would see the other 20 items as worthy secondary goals. Buffett saw them as the most dangerous kind of distraction. They were seductive because they were good ideas. They were important enough to make the list of 25, but not important enough to be in the top 5. And that's what made them so perilous. They were the good opportunities that threatened to derail the great ones. This simple exercise reveals the ruthless prioritization at the heart of Buffett's success. It's not enough to identify what you want to do. It's more important to identify what you will consciously not do. The word no is not just a tool for time management. It is a weapon of strategic abandonment, clearing the path for what truly matters. The psychological trap that Buffett's power of no dismantles is the potent combination of social proof and the fear of missing out, or FOMO. Social proof is our tendency to assume that the actions of others reflect the correct behavior for a given situation. If everyone in our industry is attending a certain conference, joining a new social media platform, or adopting a new management fad, we feel an immense pressure to do the same. We assume that if so many people are doing it, it must be the right thing to do. This is a cognitive shortcut that saves us from having to think for ourselves, but it often leads us to follow the herd right off a cliff. FOMO is the emotional consequence of social proof. It's the anxiety that if we don't participate, we will miss out on a valuable opportunity, a key connection, or a crucial piece of information that everyone else is getting. It's a powerful primal fear that keeps us tethered to our inboxes and glued to our news feeds. Saying yes is the path of least resistance. It avoids social friction. Saying yes to a meeting invitation makes you seem like a team player. Accepting a lunch invitation makes you seem agreeable. Joining a project makes you seem committed. Saying no, on the other hand, requires social courage. It can feel confrontational. It risks disappointing people. And so most people default to yes not out of strategic alignment, but out of social convenience and a fear of being left behind. Their calendars become a reflection not of their own priorities, but of the collective priorities of everyone they know. Buffett's entire approach is an exercise in overcoming this herd mentality. He famously said, "Be fearful when others are greedy, and greedy when others are fearful," a principle he applies not just to markets but to his time. When the herd is frantically networking at conferences, he is an intellectual hermit reading in his office. When others are chasing the hot new industry, he is digging deeper into the old, boring ones he already understands. His ability to say no is rooted in a supreme self-confidence in his own judgment and priorities. He doesn't need social proof because he has done the work to develop his own proof. He doesn't fear missing out on what everyone else is doing because he is laser-focused on the very few opportunities that he has identified as truly exceptional. This gives him the psychological fortitude to say no not just to bad ideas but more importantly, as the pilot's story shows, to good ideas that aren't his best ideas. To harness the power of no, you must implement a priority filtration system. This is a mental model designed to automate the decision-making process for your time. The first step, mirroring Buffett's exercise with his pilot, is the 25/5 definition. You must take the time, away from the daily grind, to thoughtfully list your top 25 professional and personal goals. Then, with painstaking deliberation, you must circle the top 5. This is not a trivial exercise. It is the strategic foundation for your entire life. These 5 goals become your constitution, the bedrock of your decision-making. The second step is to create the avoid at all cost list. This is the crucial Buffett twist. The 20 items you did not circle are not secondary priorities. They are now your enemies. Write them down on a separate list titled Avoid at all cost. Post it somewhere you can see it. These are the sirens on the rocks, the seductive distractions that will shipwreck your progress on your top 5. You must train your brain to have an almost allergic reaction to them. The third step is to install the hell yeah or no filter. This is a concept popularized by the writer Derek Sivers, and it perfectly complements Buffett's thinking. For any new opportunity, request, or invitation that comes your way, you must ask yourself if your gut reaction is, "Hell yeah, that's amazing, I must do this." If it is not an immediate, unequivocal, "Hell yeah," then it is an automatic, "No." There is no middle ground of, "Well, that sounds kinda interesting," or "I guess I should probably do that." This binary filter is brutally effective at eliminating the lukewarm commitments that slowly bleed your time and energy. A true hell yeah opportunity will almost certainly align with your top 5 goals. Anything else is a distraction from your avoid at all cost list. The fourth and final step is to master the graceful no. Saying no doesn't mean you have to be a jerk. Develop a set of polite but firm scripts to decline requests. For example, "Thank you so much for thinking of me for this project. My plate is completely full right now with my core priorities, so I'll have to pass, but I wish you the best of luck with it." Or, "I appreciate the invitation, but I have a policy of not taking any new meetings until I've completed my current major project." A graceful no is direct, honest, and respectful of the other person, but it is unwavering in its protection of your time. This 4-step system, 25/5 definition, the avoid list, the hell yeah filter, and the graceful no, transforms saying no from an emotional, case-by-case struggle into a disciplined, strategic reflex. The antithesis of this is the people pleaser, an individual whose life is governed by the tyranny of other people's expectations. Their core motivation is not the achievement of their own goals, but the avoidance of disapproval from others. They say yes to everything. Yes to the extra project their boss dumps on their desk, even though they're already overloaded. Yes to joining a committee that has nothing to do with their career path. Yes to the social engagement they are dreading because they don't want to seem unfriendly. Their inbox is a to-do list written by a committee of everyone but themselves. They live in a state of perpetual overwhelm, feeling constantly busy but deeply unfulfilled. They are a ship without a rudder, blown about by the winds of external requests. The disastrous consequence is that they make incremental progress in a dozen different directions but never achieve a breakthrough in any of them. Their energy and focus are so diluted that they become merely average at many things but truly excellent at nothing. Their career trajectory is a long, flat plateau. They are seen as reliable and helpful, a safe pair of hands, but they are never seen as a visionary or a leader. They are passed over for promotions in favor of colleagues who are less helpful, but have a track record of delivering spectacular results on a few key initiatives. The deepest tragedy for the people-pleaser is the slow erosion of their own identity. Over years of saying yes to things that don't align with their true passions and goals, they forget what those passions and goals ever were. They look back on a career and a life filled with activities they were obligated to do, not chosen to do. It is a quiet, comfortable path that leads to a destination of profound regret. A life spent serving 1,000 minor priorities that ultimately amounted to nothing major. The direct financial connection of the power of no is the principle of concentrated force. In military strategy, a general who spreads their army too thin across a wide front is easily defeated. Victory comes from concentrating overwhelming force on a few critical strategic points. The same is true in business and investing. By saying no to the vast majority of opportunities, Buffett is able to concentrate his two most precious resources, his capital and his attention, on a very small number of investments. This is his famous 20-slot punch card analogy. He advises investors to imagine they have a punch card with only 20 slots in their lifetime, and each time they make an investment, they punch a hole. With such a finite number of choices, you would become incredibly selective. You would wait for the truly exceptional opportunity and then invest with high conviction. This strategy of concentration is what leads to exponential financial returns. A portfolio that holds small positions in 200 pretty good companies will likely track the market average. A portfolio that holds massive, concentrated positions in 5 truly outstanding companies, identified through thousands of hours of focused research, has the potential to dramatically outperform the market. This is visible all over Berkshire Hathaway's balance sheet. Their portfolio is famously concentrated in a handful of giant holdings like Apple, Bank of America, and Coca-Cola. On a personal career level, the financial impact is identical. The person who says yes to everything builds a diverse but shallow skill set, making them a commodity in the job market, earning a commodity wage. The person who says no to almost everything in order to become a world-class expert in one valuable niche can command an extraordinary income. Their skills are rare and in high demand. They have pricing power over their own career. The financial result of saying no is the difference between earning a linear income and building exponential wealth. It is the choice between being a jack of all trades, master of none, with a diversified but mediocre financial life, and being a focused master, with a concentrated and extraordinary financial outcome. The fourth pillar is what can be termed the opportunity funnel. This is the strategic culmination of the previous 3 pillars. The empty calendar provides the space, the compounding knowledge provides the wisdom, and the power of no protects the system. The opportunity funnel is what this entire system is designed for, to be perpetually prepared to act with speed and conviction when a rare, life-altering opportunity, a fat pitch, presents itself. While the rest of the world is too busy, too distracted, or too slow to react, Buffett's system ensures he is liquid, both financially and temporally. He is not just waiting for opportunities. He has built a life structure that is a magnet for them. This pillar is about understanding that true effectiveness is not a constant grind, but long periods of preparation followed by short bursts of decisive, high-impact action. The ultimate foundational anecdote for this pillar unfolded during the darkest days of the 2008 financial crisis, a period of global panic and market meltdown. On Tuesday, September 23, 2008, with the financial world teetering on the brink of collapse just over a week after the failure of Lehman Brothers, Warren Buffett received a phone call. It was from the CEO of Goldman Sachs, Lloyd Blankfein. The venerable investment bank was facing a crisis of confidence. Its stock was plummeting as investors feared it would be the next domino to fall. Goldman needed capital, but more than that, it needed a vote of confidence from the most trusted investor in the world. They offered Buffett a deal, a $5 billion investment in preferred stock that would pay a staggering 10% annual dividend. Additionally, he would receive warrants to buy another $5 billion of common stock at a fixed price. For most people, a decision of this magnitude would take weeks if not months of frantic analysis, committee meetings, and due diligence. The markets were in chaos. The risk of total systemic collapse was real. But Buffett didn't have weeks, he had hours. And this is where his entire life's philosophy came to fruition. His calendar was clear. He didn't have to cancel a dozen meetings to focus. He had spent the previous 50 years compounding his knowledge of financial institutions, so he didn't need a team of analysts to explain the situation to him. He understood the business, the balance sheet, and the long-term franchise value of Goldman Sachs better than almost anyone. He had said no to countless mediocre deals, so Berkshire Hathaway was sitting on a mountain of cash, ready to be deployed. He was, in a word, prepared. He analyzed the deal, negotiated the terms to his satisfaction, and by the next day, Wednesday, September 24th, the deal was announced. The effect was electric. Buffett's investment was the seal of approval that helped stabilize not just Goldman Sachs, but the entire financial system. And the financial return for Berkshire Hathaway was immense. They collected $500 million in dividends each year, and when they eventually exercised the warrants, they booked a profit of over $3 billion. This was not a lucky bet. It was the inevitable outcome of a system designed to do exactly this: remain patient, prepared, and ready to swing with decisive force when the perfect pitch, born of maximum pessimism, came over the plate. The opportunity funnel worked to perfection. The underlying psychological principle at play here is Buffett's ability to overcome normalcy bias and act decisively during a crisis. Normalcy bias is our tendency to underestimate both the possibility of a disaster occurring and its potential effects. We assume that things will continue to function in the future the way they have in the past. When a crisis does hit, this bias often leads to a state of paralysis or disbelief. People freeze, unable to process that the normal rules no longer apply. We saw this in 2008, as many financial leaders, conditioned by decades of market stability, were simply unable to comprehend the speed and scale of the collapse. They were mentally and operationally unprepared for a true black swan event. Buffett's entire system is an antidote to normalcy bias. By spending his time reading history, studying past crashes, and thinking about systemic risk, he is constantly preparing his mind for the possibility of extreme events. He does not assume that the future will look like the recent past. He operates with the awareness that, as he likes to say, the tide will eventually go out, and you'll see who's been swimming naked. This mental preparation allows him to avoid the emotional paralysis that grips others during a panic. While everyone else is reacting to the fear and uncertainty of the moment, he is able to calmly access his deep knowledge base and assess the situation from a rational, long-term perspective. This connects to another principle, the availability heuristic. Most people make judgments based on information that is easily available and emotionally salient. In a crash, the available information is all negative. Falling prices, scary headlines, panicked commentary. This leads them to sell at the bottom. Buffett, however, has made a different set of information available to himself through decades of study. The history of previous panics, the intrinsic value of the underlying businesses, and the long-term resilience of the American economy. He can therefore see the crisis not as a threat, but as the very opportunity he has been patiently waiting for. His empty schedule is the final piece of the puzzle. It ensures that when the crisis hits, he has the cognitive bandwidth to think clearly, unburdened by the operational chaos that has engulfed every other executive. He can be the calm eye in the center of the storm. To build your own opportunity funnel, you must adopt a patient predator mental model. This is about structuring your professional life to be ready for the rare but transformative opportunity. The first step is to build your war chest. This applies to more than just money. Yes, you need to maintain financial liquidity, keeping a portion of your assets in cash or near-cash equivalents so you can act when asset prices are low. This is a core tenet of value investing. But you also need to build a time war chest and a focus war chest. The time war chest is your empty calendar, the block of unstructured time that allows you to drop everything and dive deep into an unexpected opportunity. The focus war chest is your well-rested, uncluttered mind, cultivated through the practices of deep work and continuous learning. You cannot seize an opportunity if you are broke, overscheduled, and mentally exhausted. The second step is to define your strike zone. The patient predator does not chase every animal in the jungle. It knows exactly what prey it is looking for and ignores everything else. Similarly, you must define your circle of competence, the areas where you have deep, specialized knowledge. Your greatest opportunities will almost always appear within this circle. Write it down. What industries, skills, or problem sets do you understand better than 99% of people? Your opportunity funnel should be specifically designed to catch opportunities in these domains. This allows you to say no to everything outside your strike zone and evaluate things inside it with speed and confidence. The third step is to scan the horizon. While being patient, you are not passive. You must be actively, if quietly, scanning for signals. This means reading voraciously, talking to smart people in your field, and paying attention to anomalies and trends that others might dismiss. The goal is not to predict the future, but to recognize a great opportunity when it appears. It's about being informed enough to know when the market is mispricing an asset, or when a new technology creates a strategic opening. For Buffett, this is reading annual reports. For a tech entrepreneur, it might be monitoring academic research papers. The activity is different, but the principle is the same. Stay informed but detached. The final step is act with overwhelming force. When an opportunity appears in your strike zone that meets all your criteria, you must act with speed, conviction, and significant scale. This is not the time for timid half measures. The entire system of preparation is designed for this moment. You have the cash, you have the time, you have the focus, and you have the knowledge. This is when you swing for the fences. This four-step model, build your war chest, define your strike zone, scan the horizon, and act with force, is how you transform from a reactive participant into a strategic opportunist. The antithesis is the frantic firefighter. This person's life is a perpetual state of emergency. Their calendar is a testament to their reactivity, filled with meetings to address the latest crisis. They lurch from one urgent problem to the next, a master of the short-term fix. They are celebrated for their ability to handle pressure and their tireless work ethic. They are always on, always available, the first to respond to a late-night email and the last to leave the office. They are addicted to the adrenaline of problem-solving, but the catastrophic consequence is that they are so consumed by fighting today's fires that they have no time to fireproof the building for the future. They never address the root causes of their problems because that would require deep strategic thinking, a luxury they don't have. When a true, once-in-a-decade opportunity appears, the frantic firefighter is completely unprepared to seize it. They are financially tapped out, having deployed their capital on a series of short-term initiatives. Their calendar is hopelessly jammed, making it impossible to dedicate the required focus. And their mind is exhausted, burned out from the constant stress of crisis management. They might even recognize the opportunity, but they are powerless to act on it. They see the perfect pitch float over the plate, but their bat is on their shoulder as they run to put out another fire in the dugout. Their career becomes a long series of heroic saves and near misses, but it lacks the defining breakthrough success that comes from seizing a great opportunity. They are the person who, after a market crash, says, "I knew I should have invested," or after a competitor's success says, "We had that same idea 5 years ago." They are a tragic figure, defined not by what they did, but by the great things they were too busy to do. The direct financial connection of the opportunity funnel is the creation of asymmetric upside. An investment or career move has asymmetric upside when the potential gains far outweigh the potential losses. A typical busy professional's life is filled with decisions that have symmetric or even negative asymmetry. The upside is a small promotion or a minor success, while the downside is burnout, missed family time, and strategic stagnation. Buffett's approach is to ignore these symmetric opportunities and structure his entire life to be ready for the rare events with massive asymmetry. The Goldman Sachs deal is a perfect example. What was his downside? If the entire financial system collapsed, his $5 billion would be gone, but so would the rest of his wealth. The system held, and his downside was effectively zero. What was his upside? Billions of dollars in profits and dividends. That is extreme asymmetry. This principle is directly reflected in Berkshire Hathaway's value curve. The company's value doesn't grow in a straight, smooth line. It grows in stairsteps. There are long periods of quiet, patient compounding, followed by sudden vertical leaps that correspond to moments when Buffett deployed massive capital during a crisis, like 2008, or made a huge, concentrated bet, like Coca-Cola in 1988. On a personal financial statement, this looks like the difference between a savings account and a venture capital portfolio. The frantic firefighter earns a salary, which is a predictable, linear income stream. It's safe, but it will never create massive wealth. The patient predator may have a similar baseline income, but their financial life is structured to capture windfalls. They might go years without a major change, but then one well-timed investment, one strategic career move into a high-growth startup, or the launch of a business during a market downturn can create more wealth in 18 months than the firefighter will earn in 20 years. The financial statement of a life lived by the opportunity funnel principle is one of explosive, non-linear growth. It is the tangible result of a life dedicated not to being constantly busy, but to being profoundly ready. The fifth and final pillar is the architecture of deep work. This is the physical and mental environment that makes all the other pillars possible. It's one thing to have an empty calendar, but it's another to use that time effectively. This pillar is about the practical, tangible ways Buffett structures his surroundings and his habits to facilitate long, uninterrupted periods of intense concentration. It's a rejection of the modern, open office, hyper-connected workspace in favor of a sanctuary of thought. This architecture is not about expensive furniture or high-tech gadgets. It's about the deliberate elimination of distractions and the cultivation of a mental state conducive to profound insight. It's the final operational layer of his time mastery system. The foundational anecdote here is not a single event but the enduring reality of Warren Buffett's office in Omaha, Nebraska. For over 60 years he has worked out of the same unassuming office in Kiewit Plaza. Reporters and documentarians who visit are often struck by how simple, almost Spartan it is. There is no buzzing trading floor, no frantic assistants rushing in and out. The most telling detail, famously, is what is absent from his desk: a computer. In an age where the most powerful CEOs are tethered to a Bloomberg terminal or a dashboard of real-time metrics, Buffett has consciously chosen to keep the greatest source of distraction and shallow information out of his immediate workspace. He gets his information the old-fashioned way, from reading physical documents, annual reports, newspapers, and books. His phone rarely rings. He has no stock ticker on his wall. The entire environment is engineered for a single purpose: to allow a human mind to focus, deeply and without interruption. Alice Schroeder, his biographer who spent thousands of hours with him, described his daily routine. He arrives at the office, picks up a stack of reading material, closes his door, and for the next several hours he simply reads and thinks. He is not managing, he is learning. He is not reacting, he is reflecting. The architecture of his office is a physical manifestation of his mental priorities. The lack of a computer isn't a Luddite quirk. It's a strategic choice. It's a moat he has built around his attention. It prevents the influx of low-value, urgent but not important communication that plagues modern knowledge workers. It forces a slower, more deliberate pace of information consumption. He cannot be dragged into an email flame war or get distracted by a breaking news alert. His information diet, as we discussed earlier, is curated, and his physical environment enforces that curation. The Spartan nature of his office, his long tenure in the same building in Omaha, far from the noise of Wall Street, and the deliberate absence of modern technology, are all architectural choices designed to protect his most valuable productive asset, his sustained, unbroken focus. The underlying psychological principle Buffett is masterfully harnessing is the avoidance of the cognitive switching penalty. Our brains are not designed for rapid multitasking. Every time we switch from one task to another, from reading a report to checking an email to responding to a Slack message, our brain pays a price. It takes time and mental energy to disengage from the first task and load the context of the second task into our working memory. This switching penalty can consume a significant portion of our cognitive capacity. Research has shown that even a brief interruption can derail a complex thought process for up to 20 minutes as our brain struggles to get back on track. A person who is constantly switching between tasks may feel busy, but they are operating at a fraction of their true intellectual potential. They are in a perpetual state of cognitive fog. The modern office environment, with its open floor plans, constant notifications, and expectation of instant responsiveness, is a cognitive switching penalty factory. It is an environment designed for distraction. Buffett's architecture of deep work is a fortress built to repel this enemy. By eliminating the sources of interruption, no computer, a quiet office, a gatekeeper assistant, he minimizes context switching to near zero. This allows him to enter a state of deep work, a term coined by Cal Newport to describe the ability to focus without distraction on a cognitively demanding task. It is in this state that our brains perform at their peak. We can absorb complex information, make novel connections, and produce our highest quality work. Buffett's routine is essentially a daily, multi-hour deep work session. He understands intuitively or explicitly that 5 hours of uninterrupted, deep focus is more productive than 12 hours of fragmented, distracted work. He is protecting his brain from the cognitive switching penalty, allowing him to deploy his full intellectual horsepower on the problems that matter. While the average executive's brain is being fragmented into 1,000 tiny pieces by the digital world, Buffett's is a coherent, focused instrument, sharpened by a lifetime of deliberate, uninterrupted thought. To create your own architecture of deep work, you can apply a mental model called the monastic sanctuary. This is about designing your environment and rituals to protect your focus. The first step is to designate your sanctuary. You need a physical space that is dedicated solely to deep work. This could be your office with the door closed, a specific chair in a quiet corner of your house, or even a library. When you are in this space, you do one thing and one thing only, your most cognitively demanding work. The physical separation creates a powerful psychological trigger, signaling to your brain that it is time to focus. Crucially, your phone and other sources of distraction are not allowed to enter the sanctuary. The second step is the ritual of entry and exit. You can't just jump into deep work. You need a short, consistent ritual to ease the transition. This could be something as simple as clearing your desk, pouring a cup of coffee, and stating your single intention for the work session. For the next 90 minutes, I will focus exclusively on drafting this proposal. Similarly, have a ritual to end the session, like summarizing what you accomplished and clearly identifying the next step. This provides a sense of closure and makes it easier to start again next time. The third step is embrace productive boredom. We have trained our brains to be terrified of boredom. The moment we have a spare second, we reach for our phones to fill the void. This is disastrous for our ability to focus. You must actively practice being bored. When you're waiting in line, don't pull out your phone. Just wait. Let your mind wander. This practice rebuilds your attention muscle. It's like resistance training for your focus. The more comfortable you become with the absence of stimulus, the less you will crave it during your deep work sessions. The fourth step is the strategic shutdown. At the end of your workday, perform a complete shutdown. This means closing all the tabs on your computer, clearing your email inbox by deferring, not necessarily answering everything, and making a clear plan for what you will tackle tomorrow. This ritual convinces your subconscious that the workday is truly over, preventing work-related thoughts from intruding on your evening and degrading your ability to rest and recharge. The monastic sanctuary model, with its designated space, rituals, embrace of boredom, and strategic shutdown, is a practical blueprint for recreating Buffett's fortress of focus in your own life. The antithesis is the always-on professional. This person's workspace is a digital battleground. They have 3 monitors, displaying their email, a Slack channel, and a live data feed. Their phone is on their desk, buzzing and lighting up with notifications every few minutes. They pride themselves on their responsiveness, their ability to reply to an email within seconds of its arrival. They wear headphones not to focus, but to be on a conference call while simultaneously typing a message to another colleague. Their work is a chaotic blur of shallow tasks. They are an expert at information triage, quickly sorting and redirecting requests, but they rarely have the time to originate a deep or creative idea themselves. They are a node in a network, not a source of value. The disastrous consequence is the complete evaporation of meaningful productivity. Despite working longer and harder, their output is shallow and unremarkable. They produce a high volume of low-quality work. They write emails, not thoughtful memos. They create slide decks, not coherent strategies. They attend meetings, not solve problems. Over time, their ability to concentrate atrophies. When faced with a truly complex task that requires an hour of sustained focus, they find themselves unable to do it. Their brain, rewired by a decade of constant distraction, rebels. They feel a physical restlessness, an irresistible urge to check their phone, to open a new tab, to do anything other than the hard thinking in front of them. Their career hits a ceiling, not because they aren't smart or hardworking, but because the modern work environment they have embraced has systematically destroyed their ability to use their intelligence in a meaningful way. They are a cautionary tale of the digital age, connected to everything, but focused on nothing. The direct financial connection of building an architecture of deep work is a dramatic increase in your value per hour. In the knowledge economy, you are not paid for the number of hours you are present, but for the value you produce. The always-on professional might work a 12-hour day, but if that time is fragmented into 50 different tasks with constant context switching, the total value they create might be equivalent to just 2 or 3 hours of focused work. The person who has mastered deep work, on the other hand, can create more value in a single 90-minute uninterrupted session than their distracted colleague can in an entire day. This creates a massive leverage on their time. On a company's profit and loss statement, this manifests as higher productivity and innovation. A team of focused individuals will solve problems faster, create better products, and out-innovate a team of distracted competitors. The financial return is higher revenue and wider profit margins. For an individual, this translates directly into earning power. The market pays a premium for quality. The software engineer, who can solve a complex architectural problem in a few hours of deep thought, is infinitely more valuable than one who spends days chasing minor bugs while being constantly interrupted. The lawyer who can write a brilliant, airtight brief in 1 day of focused effort will command higher fees than one who takes a week of distracted work to produce a mediocre document. Ultimately, your personal income becomes a reflection of the depth of your focus. By building an architecture that allows for deep work, you are fundamentally changing your economic output. You move from a linear relationship between time and money, more hours equals more pay, to an exponential one, where the quality and rarity of your focused output allows you to command a disproportionate share of the rewards. It is the final, operational key that unlocks the financial potential of mastering your time. You have just navigated the 5 pillars of Warren Buffett's philosophy of time. You have seen how the principle of deliberate emptiness creates the space for genius. You understand that time is a compounding asset, that knowledge invested today pays dividends for a lifetime. You have grasped the strategic power of no as a shield to protect your focus. You have learned to build an opportunity funnel to be ready for the game-changing moments. And you have the blueprint for an architecture of deep work to make it all a reality. You now possess a powerful mental tool, a complete system for reclaiming your most finite and precious resource. You have the antidote to the cult of busyness, the means to move from a life of frantic motion to one of purposeful, effective action. But this is only one side of the equation. This entire system is designed to create time and space for one primary activity: high-quality thinking. But how do you ensure the thinking that fills that space is, in fact, high quality? Owning your time is a profound advantage, but it is an empty victory if you invest that time in flawed ideas or second-rate opportunities. The system you've just learned is the prachasek, how. It doesn't answer the prachaseki, what. What do you read? What do you think about? What mental models do you use to evaluate a business or a career choice? That is the missing link. Buffett's system is a network of interconnected models, a lattice work of thought. You have just mastered the framework for allocating your time. The next step is to master the frameworks he uses for allocating his capital and his attention. The video on your screen right now is the other half of that map. It is the bridge from the how to the what. It deconstructs the specific mental models Buffett uses to filter the world, to identify the truly exceptional opportunities that are worthy of his reclaimed time. Think of it as the operating system that runs within the architecture you've just built. You have taken the first, most crucial step to break free from the chains of a cluttered schedule. You've started to think like an owner of your time, not an employee of your own calendar. The next step is to learn to invest that time with the same ruthless intelligence he invests his billions. The journey to complete your mental arsenal continues. The choice, as always, is yours.